All right, well, welcome everybody. We've been doing this now for a bit. And in 2023, this might be the last one for 2023 before the holidays. But in 2024, I am lobbying hard to do this weekly so that we have a weekly coaching and mentoring session here at the Bookmap Academy and really ramp up this Academy program. Get lots of feedback to you guys, get you really honing your strategies and your trading here. This is the goal. All right. So, and if you're interested in this program, anyone who's over on YouTube or in here and is not familiar with the program, you can go to the More button on bookmap.com and go to Academy under the community here. And then you'll see all the details in here and how to sign up and what you get, etc. Anyway, that's that. Then there's also freebies that you get in here as an Academy member, one of them being this Market Pulse tool that we've been covering a lot. Reason
Bruce,
being, yes?
you need to share your screen in Discord.
Okay. There we go.
Good to go?
All right. So anyway, the reason we've been allowing free access to this is it's a new tool, and allow you guys to play around with it and develop an edge. So this is exactly what slowdown and crash and Jack, you've been doing it. You were one of the first to start using this tool when it first came out. So we're offering it to ramp up your trading, find these edges, take advantage of it, and then give us some feedback as well. All right, so anyway, let's go through a few disclosures, and then Jack, I'll turn it right over to you. General disclosure: all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Yeah, Jack, why don't you jump on and
all right,
take it away.
Go ahead and share my screen here.
In the lower left.
There we go. That should be visible. I'll wait until it loads up on YouTube, and then we'll get going there. While we're kind of getting started here, one of the things I want to kind of highlight, when Bruce is talking about ramping this up, we've been working on this for several months now. Bruce has been talking to me about it, and Bruce and the Bookmap team have been working on it. And really what they've been kind of focusing on is two real key elements, and that's journaling and community. And you're getting the community element right here. Whether you're in YouTube participating in the chat there or just lurking and listening, or you're actually participating by completing a spreadsheet and interacting with the community, asking, answering questions, etc. These are incredible opportunities for you because trading can be very lonely. You're risking money to make a trade, to try to gain alpha, essentially. And this can be a very difficult thing. And by having those kind of community elements, it will help kind of stabilize you so that you don't feel like you're so alone. You can see what people are doing. You can improve your process by interacting or improving and including other people's things. But the most important element is one thing that Bruce and I really harped on from the get-go, and that's journaling. And that comes to the spreadsheet. At the end of the three traders that I'm going to highlight, I'm going to kind of go over a couple of key elements of what I think should be in a good image. As I'm kind of prompting you with that, and we're looking at these three traders, I want you to think about what I think is a good thing to keep in your images. It's kind of like was it on the checklist at the end kind of thing, all right? Because I've seen a lot of things over the last few months. I've gone over hundreds of images essentially, and I see a lot of consistent things happen. So let's try to jump into these and see what you guys can pick out of these as well. The first one we got is Jay or Jay-Z. I'm not exactly sure how to pronounce that. You can let me know. He's provided another piece of good content. He's improved week after week. This is his last trade, I believe, from the November timeline. And he highlights something very important right at one here. You can see in his summary, he's looking for a VPOC short. He notes that he could have waited for a squeeze. He should have waited for a squeeze. And these types of squeeze often happen. And you can see that my Epic Pen's not working here. Let's see if it loads there. And you can see that he enters the market here, right in that green area right there. And then immediately after, at 2, you can see that he gets a buy sweep, just immediately putting him in a nice 2-3 point drawdown right there. And that's something that you'll often see happen. Now, this doesn't necessarily mean that his trade's a bad trade or that he entered too early. It's important to understand that everybody's risk tolerance is different. And a big difference between institutional traders and personal traders is, in fact, that their risk tolerance is different. They're able to hold pain longer. So I'm not necessarily saying that this is a bad element, but this kind of gives confluence to the point where maybe he should have waited here for a little bit for a pullback or a retest. He does get his move after his drawdown, and he does scale out here, and you can see that clearly right there. Following that, you can see that he gets a pullback back to that area where he was worried about the squeeze, and this is really that final squeeze that he's kind of talking about before he gets a further dump with a nice low volume, high pressure drop down there. Now, from there, we can see also that he's got his targets clearly identified over here in the right, and you can see them kind of track all the way over here. And you can see that he does reach his targets where he was. Had he waited for that squeeze opportunity, he really could have let himself stay in the trade potentially a little longer. He might have used this as a swing to place his trailing stop at, and then that would have given him a little bit of buffer right here, and then eventually reach his further target. This is a really great example of how things can kind of work against you, but you had the right direction. And this is one of the most important parts of journaling, is iterating on this approach, right? If he recognizes this now, next time he sees it, he's likely to not do the same thing. Maybe he waits a little longer. Maybe his risk tolerance is a little higher, so he lets his trailing stop stay at where it initially was. He doesn't move it down like he did after he scaled. These are all important concepts. One of the important things that I want to highlight in this image, you'll notice that it's really condensed horizontally. And you can see, let me kind of pull up a different color here. You can see these kind of operating on a 30-minute time slice, these horizontal time slices. This is one of the elements that I see a lot. If you really want to leverage Bookmap and order flow phenomena, you really want to give yourself the opportunity to see the order flow phenomena. It's not just about trading levels. You can do that with any platform. Bookmap's great at it, but you can do that at any platform. Utilizing the order flow itself and being able to see some of those more, finer details can really help you. I recommend, Jay, kind of spreading this out and getting it into probably about the 5-minute interval. I think that's where you're going to find the most detail. Now, you might have condensed this just to kind of make it available for us to see. That's totally fine. However, again, part of the journaling process is you're going to go back to these images 6 months, a year, 2 years from now. You're really going to want to be able to see what you saw then. So really kind of, I think saving more screenshots is probably better in that case. So those are kind of the feedback that I would have. Great job, though. You're improving each and every time. It's great to see you. I really like that you're calling out your targets. You have good concepts of when you're entering the market. It's very interesting just to enter short off of VPOC. I wouldn't have thought to do that. So it's an interesting strategy. I like to see how it works out for you in the long run. Kind of moving on to Adrian. Adrian, if you're listening, I don't know if you are. I've gone over all of your trades from November. This is the one I didn't go over. This is the most recent one from 12/7. Now you'll notice with Adrian here, he utilizes a lot of external tools as well. He's not only just using Market Pulse, but he's also looking at an indicator in TradingView. He's also looking at an indicator in NinjaTrader. So he's using a lot of tools here, and you can see that he's got his essentially summary at the same spot. Great location. You're really getting reader's viewpoint right there at the get-go. He's new to my coaching rotation, and it was really great to kind of see his content And you can see this kind of multiple approach, something very similar to kind of what I do. Now, this particular trade is looking at a breakout short. This is kind of something he's done a couple of times now, is take a breakout trade. And he's looking at taking that breakout right at 2. And you can see the consolidation pattern right here. Oh, let's mark this. Oh, I love
Jack, I'm not sure your pen is working
Epic
there.
Pen doesn't like its shortcuts. So you can see the breakout right here. You can see this consolidation pattern, and you can see it again right here. Okay. Now from there, he's taking that short, and you can see it documented here. This is something that he does a lot in his images. He'll document them multiple times. He'll show what he's looking at in Bookmap. He'll transpose it over to a traditional chart as well. This is fantastic journaling. This is what you want to see. You can see that he's taking the possible short entry, and then he's looking at the passive liquidity. This is what I'm talking about when I mention utilizing Bookmap for its order flow capabilities. By seeing that passive liquidity, by seeing the entire book in Rhythmic, this is a key element here. And he's looking for an initial target there. You'll notice that this is also typically a mean reversion trade, as this is VWAP right here, and he's trading back into VWAP on a short breakout. It's a great concept right there. We can also see that he's talking about exhaustion here in the box, and you can kind of see that a little bit to this level right here. This is where his bid-ask spread lines kind of spread out a little bit, and you can really see that. Not only that, but you can also see an element that we talk about a lot, and that's higher lows. And you get higher lows, and you get consecutive higher highs. And what is he looking for coming out of this? He's looking for a potential long entry, and he's looking for a bounce off of VWAP, essentially, in his documentation here. Where is he looking at for his target? Well, he's looking to go right back to that consolidation area, right? And these are kind of back and forth reversion type trades that you're looking for. I actually went and looked at this day, and VWAP kind of scaled up a little bit, and VPOC actually migrated a little bit as well. So there's a lot of confluence to this trade. That was really great. You can see he's talking about his seller volume, and he's also showing market pulse right here. He's showing that you're consistently getting buying, and then the selling kind of just fades away and kind of zeroes out while buying takes the pressure. This is a really great trade by Adrian, and I really like that he's able to utilize those different elements. Similar to Jay-Z, I think that the time slice is a little narrow, but this is kind of more isolated to this particular image because his other images are very wide. I think that he used a different screen cap utility on this one, so maybe that feedback's not exactly accurate for this particular thing. But if it is, I would take a look at that. By combining these different elements and shrinking that screen, you make it easy to read right off the bat, but you lose that journaling perspective, that coming back in a few months from now to see how the strategy works. You kind of lose that. Another thing that you can't see here that Adrian does really well is he saves these and he names them, and he names them with a strategy. The previous one from this one was the date and then reversal long, and he actually names exactly what he's looking for. This makes it very easy to see all of these images in a folder and go, okay, I was looking for a reversal long to VWAP. Why was I looking at it here? And then he could go back and see that. These are very, very important concepts when you're going back on your journaling. And that's what journaling is about. It's about that iterative approach. So really great sign to see there from Adrian. I would just look at maybe keeping that spread out a little bit. The newer screenshot utility I didn't like as much. I think you should go back to the other way you were doing it. I think it was much better there. Great job though, Adrian. Like I said, I've got all your feedback. I got to copy it over from the offline mode. I went through all of that while I was on travel to Vegas this past week. So great job. And then the last one I've got.
Hey, Jack. Maybe we can open the mic if there's any.
I looked and I didn't see him in the Discord. I looked though.
Okay.
For that reason.
And your it looks like your pen tool wasn't working on here, but anyway.
It's pink. You don't see it?
No. Oh, now I see it. I see something. Yeah.
Okay. I mean, I can change the color too. I can go to yellow. Maybe yellow is a little easier for people to see.
It's fine. It's fine.
But yeah, I looked. I didn't see him in the Discord because I was going to mention that to him.
Okay. And I don't
The
know if
last one,
Jay's a as well. I don't know if he's in here.
see here.
Make any have any comments on the image, previous image?
I don't see him. JZ, would you like to make any comments, buddy? We can go over yours real quick. There you are.
Hey,
Okay,
can you
let's
hear
go
me?
back. Yeah, man.
Hey, there you are.
Oh, cool. Thanks for having me up. Yeah, thanks for looking over this one. Yeah, I mean, I think probably got way too aggressive on the spelling. That's probably a
I
good
think
tip.
I think
But
your aggression overall was okay. Mainly because of what you were looking for, right? Like you really annotated like you were looking for a short off VPOC, and you got exactly what you're looking for.
yeah,
I
yeah,
I think what kicked you in the shorts was moving your stops. Let me mark that here. You moved your trail down right here. Um,
exactly.
I think that you really want to keep it at your swing, right? So if you had your risk right here, I think you should have kept
Keep
it
it.
there until you got another swing. Um, but again, like you're at that 30-minute time zone. I don't know if this is a good swing or not. So maybe your stop was good. It's really tough to
Yeah,
tell.
it's harder to look when it's kind of zoomed that way. Yeah, I'll try to like do it maybe more zoomed in, and then I'll just try to like stitch it together or something so you can see it play out.
I just do 2 or 3 screenshots, to be honest with you.
Okay.
Yeah, I just put them side by side, like because I label them like part one and part two. I mean, at that point when you're going through your folder, right, it's really easy to know. Okay, well, part one is part one. So, um, but it's hard to kind of go back, and that kind of alludes back to the point of like when you're going back and reviewing these, you can't really tell if this is a good swing or not. Maybe it wasn't. Maybe that's why you didn't, or you did move it down. Maybe it was. So.
Right.
That's kind of one of those things because you moved it right to the swing. So
Yeah, I think that's something that I need to definitely not do because it's hurt me once a couple times.
yeah, but again, everybody's risk tolerance is different, so it kind of depends. But
Yeah, but no,
again,
I mean I scaled it, so I think it made sense to leave it
yeah,
because
exactly.
it's more than likely it can
Or
return to where you entered.
and something this is something that Bruce has talked about a few times during the all markets. I don't know if you've watched his stream,
Mhm.
but he'll talk about you move it to where you're break even, to where you're always like 0 + 1 tick. So it's not a negative trade after commissions or anything, but like it gives you that a little bit of wiggle room, so you don't have to worry about it. It takes that pressure off of you. Maybe that's something you might
Okay.
want to look into.
Yeah, that sounds like a good idea. I'll
So,
try something like that.
yep. But I definitely recommend keeping those spread out a little bit more, especially because are you a newer trader or have you been trading for quite a while?
Well, I've been trading crypto for a while, but I just started trading futures like 2 months ago.
So liquidity is kind of a different beast altogether for you then.
Yeah.
Yeah, I definitely would keep things a little wider in your documentation because you'll notice and you probably noticed this with your crypto trading, after a couple 100 hours of trading, you see things differently than you did when you were first trading. And you're going to go back and you're going to go, I should have taken a long there. I should have taken a short there, or I should have let this ride longer, right? And those concepts will start coming to you. And that's really why it's great to keep all of the information visible, because when you go back, you'll see these things, or you'll see when you should have gotten out of a trade because you see things differently, So those are important concepts, I think. But
Okay. Yeah, now I'll
great,
try to do that.
great
Thank you.
setup. You're definitely improving overall too. Your first screenshots, they were just like boxes, but now like we're getting a lot of good information. We're seeing what you're doing. I'm able to piece together what your process is. So, and I can
Thanks.
tell you actually looked at the feedback in general that I put in there last time because you made these changes. So really great job, man.
I actually have
Yeah, I'll try to put some more in.
Go ahead, Bruce.
I have a suggestion or a comment in here as well, like order flow wise. There's a pretty strong offer up above there. I mean, taking a trade right at VWAP, or I mean, point of control, it can be kind of dangerous. However, you've got that offer on your side, and then after you get that initial move down, you have a bit of sell volume, and it comes right back. So it's still kind of unclear, but the offer is still strong, which is good. And then you get the sharper move with more volume on it. That helps, give you insight that, okay, it's going to accept below the point of control, and explore, to the downside somewhere.
And he's talking about the pressure right here.
Yeah.
Yeah, I should have noted that. That's definitely important. Yeah, it seems like that helped me or assisted in keeping
Well, yeah,
it from
and there's really
going.
nothing down here preventing,
Not
right?
too much, yeah.
And when you have less passive liquidity, it doesn't take as much volume to get a move in that direction. That's kind of what that helps. That's the elevator down, escalator up kind of mentality. Sometimes it goes in the other direction, situationally day to day, but that's kind of what he's alluding to there. But again, like spreading it out, you're going to see so much more detail. You're going to be able to present more detail, and then you're going to be able to iterate on those things. I think the VPOC short, just kind of go and take a scalp, is very interesting. I haven't looked at it before. Bruce does mention though that like you're very close to VWAP here too, so it is pretty aggressive, but it's interesting. I'd like to see how it plays out for you if this is a strategy you tend to employ in long term. So it's great to see. It's great to see people doing different things and having different risk preferences. So
Thanks.
you have anything
Yeah.
else, buddy?
No,
No.
that's it.
No, that was it. Yeah.
All right. Let's double check, see if Adrian's here. Don't see him. Nope. Okay, I'm gonna go down to Allan. Allan is probably one of the most diligent contributors to just journaling. He goes through a process. He's done a great job with this. One of the things that he's done is he's labeled his trade right off the bat. He's looking for a responsive buying long. That's the name of his strategy that he's looking for here. This is a very key element. You'll see, similar to Trader HE, he might call it a sneaky lunch move, or me, I might call it an opening range trade. We like to label things because labels make it easy to reference it. You could label it trade 1 alpha Z, whatever you want to name it. It's a really important concept there. Now he's noting at 2 here, he's noting that he's got some sell ice detected and that it executed. This caused a giant absorption effect right here at this lower area here. It finally pushed through, and then we get a little bit of pressure following and a little continuation. Now he notates a stop run. These aren't necessarily sell stop runs. This is more just low volume trailing stops kind of. And you can kind of see that tick in right here. When stops occur right around the previous swing, those are more indicative of kind of structural stops. Think of like change of character, break of structures, those kind of things. A lot of people will play stops there. When things break above a consolidation, they might put a stop right below where the previous swing was, similar to what we were just talking about with Jay-Z. But then he notates something really important. He notes that you get a sell stop or a buy stop of 50, but you see a sell stop canceled. Now, this is very interesting. When you see, or ice, excuse me, not stops, ice. When you see icebergs canceled, that can be an indication that there's potentially volume coming, or maybe somebody who is institutionally in a trade no longer likes that trade. And the reason they might not like that trade should be interesting to you. From there, he notes he's got very good volume pushing back into the consolidation range at 4, and then you can see this responsive pressure. Now, he doesn't note where a potential entry or exit was on this particular trade. But if I were to look at taking a trade here, I would be looking to take a trade right around 5. I would be looking similar to Jay-Z's setup, a consolidation, break of the consolidation, maybe a potential retest and wait. It just depends. Another element here is he's got in confluence and kind of confidence of not being short. You've got a very key level very close to you at 16,000 on NQ. That's a very psychological level. Breaking those levels typically is going to take a lot of volume, and you're generally going to see a kind of retest of that. Any kind of those big psychological levels, you'll really kind of see that. So it's kind of giving confidence to the long opportunity here, just looking for a good entry essentially. And really 5 is kind of where I would take that entry. And then after that, one of the other things that Allan's been working on, and this is something he's been iterating on, kind of going back to that journaling process, he's been iterating on this subchart. He's expressed to me that he's not quite happy with the way he's got it displaying. He's using market pulse. He's kind of trying to get the breaks and the stops and the icebergs in there. And he's been really working at this. And you can see that in his images over the last couple of times. You want to see those things because you're going to come back and you're going to recognize these things later on. And you're going to be like, oh man, I really liked the way that was showing now that I understand what's going on. Or maybe that really wasn't helping me. These kinds of concepts are really important. And by getting these in his images and working through them, he's really showing that kind of iterative process. Very important as a trader. And we do actually have Allan here, if I remember. Yep, I see him in chat. Can we get him up here if he wants to be? Allan, do you have any comments for us, buddy? Hey. You might be on push to talk.
You hear me?
Yeah, I got you. How are you?
I got comments. Yeah, this is basically like one of my favorite trades is to find the looking for strong selling going and then waiting for the response of buyers coming. It's like I don't want to say it works all the time, but nothing works all the time. But that's why I favor these trades. I guess that honestly, when I see the trade, the last part, when the sellers go, go right before they go up, that's like the main thing for me. But I'm trying to add more information beforehand that's showing the clues that's leading up to this. Like you see it like this little nuance. Like also a game of confluence is that the sell iceberg was canceled. I tried to make it. I just realized that.
that was great.
There's a detected sell and then there was canceled. So then it was I sort of blew the green bubbles. The subchart is I don't have a subchart. I don't use a subchart like that. The only thing I have in my subchart is the icebergs and stops. It's just that when I save my setup, for some reason it doesn't. I restart it every morning and it leaves it on there, and then I don't take them off. So like I don't even use the subchart as much. So I'll clean
very much at all.
I'll clean that up because it's just making a mess for no reason.
It's all right. It's all right. I noticed that you've been changing it around sometimes. Maybe I'm just catching you about this. Thrasher Headboy just asked a question in chat. Where's the best place to learn about icebergs and all those technical terms? So you can see icebergs on the CME website. I'll try to get that link and I'll post that in the Academy and ping you in it.
There's also I'm sorry to interrupt you.
No, go ahead.
Also, you see, like also what's going up. There was a 250 contract iceberg sell executed. So if it was already executed all the way down there, and the market's going up, I also took that as a confluence. I guess the arrow is where I got out. Like usually I point the arrow up where I got out.
Yeah.
I guess I'll just try and say I got out over here or whatever for the future.
You can just make you can make triangles or something. Anything you want. Just make it a little more clear. I think would be really good.
I came in a little bit late. Did you have any questions?
No, one of the things that I said initially was you're one of the few that put a title right at the top left. I think that's one of the most important things. What style is it? That's the most important concept because you can name this image.
Yeah, it gives me. Because when I as soon as because then I already had my head. This that and trade, and then when I open up a trade from last month, I'm not what's the movie with Dustin Hoffman, Rain Man? Like you remember every single number, and every single like trade. Like in the movies, yes, I trade. He remembers a trade like from 10 years ago, everything like whatever. I'm not that guy. But if I write any type of description and whatever, it'll give me an idea when I open it up, and I know what to look for. I kind of remember what happened with this trade.
That's the most important part is being able to do that. putting enough information in there to where you can recognize what you're looking at when you come back to it, because you're going to come back to these eventually. So
Yeah, I mean, everything repeats itself.
yep, that's
I
great.
I don't. Is it Jack, by the way?
Yeah.
Hi, Jack. Hi, it's Allan. Nice to finally speak to you.
Yep.
I'm not such a big lover of technical analysis. I know when we spoke a little bit earlier, you said like put the pattern, but like all those stuff.
Whatever it is you see, yeah.
It's like I just because I took the CNT exam, all that, and I'm not going to say it's hocus pocus because it does work. I mean, there is people use it, but you have to know how to use it in this. But order flow is order flow. If the order's there and the way the market reacts, that's at the end. It's what making those patterns. That's what's doing everything. That's like driving the engine behind everything that you see. So
annotating what you see is the most important part. Annotating what you see is absolutely the most important part, and doing it in a way that helps you, right? And that's what you're doing. So, this was really solid.
And I added the time and sales keeps on erasing because I don't know when you see like if you want to see actually like an iceberg, or sometimes also you see that like the Christmas, I call it the Christmas tree contrast. You see the red versus the green, and then if you see a whole bunch of green like in the corner of your eye, like, oh crap, and then I have an issue. I don't know if you guys have it. I think Bruce told me that you can't, when you take a screenshot with Market Pulse, you can't it doesn't always show on the screenshot.
So I use Windows Snip tool.
Yeah, you got to use another screen share shot software.
I use Windows Snip, which is just
you just do a snip,
Shift Windows key and S, and I do that, and then I make sure they just load up.
Shift Windows key and F. The problem is I don't want S. I don't know which of the three screens it'll take. I can always do it manually.
You get to select what it does.
Oh, really? So
yep.
The Windows screen. What was it again?
Dan just put it in the chat there for the channel here. You should be able to see it.
Okay.
And it creates a draggable area, and okay. That's what I
so utilize. I should use that instead of until they figure that out one day.
It's the way the screenshots kind of work. It can't.
Sometimes it actually has come in on the screenshot, but whatever. Yeah. I'll use that.
But overall, this is great. Essentially, what this is very similar to the other two trades. It's a consolidation breakout trade. Essentially, that's all three of them ended up being very similar to that, and I didn't make it that way intentionally.
I could have made a box around the column. I could have made a box between like 12 p.m. until 15. Like that's like the college out, and
you could have done even further from what it looks like here. Honestly, like this is pretty much all the consolidation.
Yeah, I could put a box.
A slight break of it, I wouldn't necessarily do because you've notated that this is a pretty big iceberg right here with volume.
Yeah,
that got really big all of a sudden too.
743.
But yeah, those are the three trades that I had. Do you have anything else, Allan? Is great overall. I've added more feedback to your stuff too, so you can take a look at that in your
and even if you took all this stuff off the chart, I try, and sometimes I'm always like trying to find the next greatest trade, but sometimes I just like find like you see the clear liquidity levels on top and another one higher, like a really big one at 650. And sometimes if you just the beauty of Bookmap and be able to see that, because like when I first started, I was using Jigsaw, and they suggested like put like an X, like wherever the top part where it says 16050, but that level, they would like mark an X, they would high liquidity, mark an X here on a spreadsheet, and that's kind of like a hassle. But the beauty of Bookmap, which sometimes I just put a simple trade that you can just see the liquidity, and if the price action is heading towards liquidity, it's like 1 + 1 equals 2. You don't have to make it so overthink it sometimes. Even though there's a lot more to explain, but sometimes if you just take a step back and just look, it's going towards the liquidity, and I guess liquidity is king.
It can be a great target. Absolutely. So overall, really great trades from all three guys. I really liked being able to share these. So that was all I really had. The things that I would like to see in general for trades, I mentioned kind of a list of stuff. I'd like to see, in general, I'd like to see people have a strategy name. You can see that in Allan's trade here. A directional bias. You can see that based on his name here, but Jay-Z also had his directional bias, VPOC short, right in his description.
Do you think I can use it as like the name of a play, or that's not descriptive enough?
No, whatever works for you. That's very easy to kind of like understand. It doesn't matter necessarily that. This kind of goes for everybody. Yeah, prospective entries, prospective exits, and mid targets. Now we saw Adrian. He has prospective targets often in his images. Jay-Z, we saw his prospective targets in his images. This one, you're still kind of going with the trade, so obviously that's not necessarily going to have it there. Kind of where I'm wrong. Those are your prospective stops. Really would like to see those in people's images when they're doing it. And then the order flow confluence. And we see a lot of that here with Allan in his icebergs canceled.
I want people to know, because I remember when Bruce, when Stops and Iceberg first came out. So I don't know, when I first started with Bookmap, like in pandemic time, and like, right, Bruce, like when it first, like around 2020 started to come out, and everybody thought it was the holy grail. There's an iceberg of 250 contracts, sell. Let's sell. Like, I also want trying to explain to people, just because you see the iceberg you can't look at it in a vacuum. You have to have as a confluence with something else to make sense of it, with the sell and also the stop runs. Like, it's very dangerous. Just like I get a lot of messages from people who aren't so familiar, and they're like, I know, like, you'd be surprised, Jack. I don't need to know anything else about Bookmap. I have stops and icebergs. I see them all. Like, okay, but you don't realize, like, whatever. I go, have fun. I see it.
People are interesting, but those things in the images are really great. And then being able to show those order flow confluences, like you saw here with icebergs, we saw with Adrian and Jay-Z with the exhaustion, annotating those and how they add or subtract to your trade direction and why you're taking the trade. Those are the most important elements that you should put in every image. So if you have questions about what you should put in your image, add those in there. And I'll put those in the Academy channel, that kind of list of stuff, so that you have an idea of how to do this. And this is for you guys to remember, so that you guys can go back and do these things on your own. But that was really the main three trades that I want to talk about, and then the journaling and community thing that I want to talk about. So that was really all I had, Bruce. I think it's up to you now, buddy.
Okay.
Go ahead and drop
no,
out here.
I actually had a comment or two for Allan as well here. Allan, you've really come a long way. It's great. Great to see. This Christmas tree. I mean, look at this order flow in here, or the transactions within the structure. I mean, red, green, red, green, red, green. But as you noted there, like on that kind of just to the right of 0.2 on the chart, that green dot there, so it's auctioning there, and it's trading there, and it comes back there on high volume again, though. And look at this is looking like a really beautiful momentum move. It looks like it's going to go to 16 or 160.50 pretty quick. But look at the distinction. Like, look at those volume dots, and then look at all that red in there is going to be trapped. So this should unwind pretty nicely to the upside. I would imagine.
Can this also be described as a short squeeze? As another?
This would definitely be a short squeeze.
Yeah,
an element of a short squeeze.
Yeah.
This would absolutely be classified as a short squeeze. Yeah.
So it could be responsive buyers together with short squeeze. There's so many components the more you break into it.
Generally kind of like what Bruce is saying, anytime you get this kind of like large momentum-y trade, you're gonna get a squeeze on the other side. And because there's gonna be traders on the other side. Always.
Yeah.
So you go ahead, Bruce.
Oh, sorry. Just another thing on the name, responsive buying. I don't know what time frame you've got here, Allan. Maybe it is responsive buying, but to me it looks more like an impulse move.
Isn't it responsive buying after a stop run is finished, and you see the response is selling or buying? And
so nothing in this image I would classify as a traditional stop run.
Right
I
here,
would say that these are
50,
stops.
number 3.
No, I would say that these are stops. I would not qualify these as
No,
stop
number 3 on
runs
the bottom. So you have
prospectively.
number 3 on the
Yeah,
yeah.
down
there's
here.
there's something there, yeah.
Yeah,
That's 50.
I generally still wouldn't call these stop runs because these are
That is a
just
stop
literally.
run. Isn't a circle a stop run?
So not every stop is a stop run, but every stop run is stops. So it's like a square rectangle kind of thing. What I would classify these is just kind of like these guys are just on the other sides of swings, and they're just literally getting stopped out because they're on the other side of the swing, and it just
So I'm
breaks their
confused.
swing.
That 50 isn't the stop run, or
I would not classify it particularly as a stop run. I would look more as a stop run as instantaneous, large volume. Typically, is what you'll see. That's not always the case. It's not always great to be absolute. Looking at the image, not in real time, looking at it in 2D,
yeah,
I
that's
would not.
also a difference when there's
Yes.
what you're describing is also part of what I factor into a run, but the velocity
This I would not particularly describe as a stop run. I would pretty much just describe this as kind of a consolidation. People got trapped and got stopped out. That's pretty much what I would classify it as. Not a typical stop run per se.
So why does the 50 show up?
Because people got stopped. They're on the other side of the trade. Anytime I put a trade in the market, right, I have a stop. And if my stop gets triggered, it's going to show up.
You're talking more, I think, Jack, of like a book sweep of multiple cascading stops as a stop.
That's typically what is institutionally considered a stop run.
Yeah.
Just encountering stops is not necessarily a stop run.
Yeah, because there's sweeps and there's that makes the lines, and then there's the.
But it doesn't have to be sweeps. It can just be volume itself. Heavy volume doesn't necessarily have to be in a sweep. It could just be pressure.
Yeah, well, I just go by the circle. If ends up forming a circle, because there was also I don't know, some iceberg executed, but I covered it. But anyway, I hear what you're saying. I hear what you're saying.
It's still great. It's still important to notate that there's stops there that you saw that people got stopped out essentially. I just typically in a consolidation pattern, I typically wouldn't consider this a stop run per se. This up here is a stop run. This is a heavy volume push with momentum. I would be surprised. I would be surprised if there's not a sweep in there a little bit. Maybe 20, 30, 40 contracts in there, pushing it a little further. And then that's why you get the momentum continuing going. I would definitely consider that more of a stop run. But it's kind of just it's just a difference of where people kind of learn from. So that's all.
That's where I learned.
I wouldn't hesitate on it.
I think what you're describing is what someone explained to me as a book sweep. Like it shows differently. I don't have an example, but I know what you mean.
Yeah, that's the fantastic thing about trading is that there's 50 different ways to say the same thing. So
exactly.
Did you have anything else, Bruce?
No, that was it.
Awesome, great. Hey, I appreciate your time, Alan. I'm going to
thank you for taking the time to look over my trades.
Of course, man. Anytime. And like I said, you can always ask questions if you want. And we still have that conversation going. So I'm going to drop out here and let Bruce take over.
Okay. Okay, hold on a minute. All right. See if I'm correctly. Yeah. Okay. So, yeah, thanks, Jack. Nice. Some nice images there, and it's really great to get different perspectives from different coaches, and also to see this improvement too. You guys have really improved over the last several meetings here. So it's working. Keep with it. Stick with it. Rob, talk about stick with itness here. So this is slow down, put this together, and he was not able to attend. So We've got it in text, and it's actually he's got a theme going here about flag patterns. And as you guys know, this is one of the strategies and setups that we have on the Learning Center here at bookmap.com, Learning Center, and in here some of the courses that we have, and we just have one right now, but like I'll be adding some others here end of the year very soon. So anyway, so Rob's been making videos and kind of going through a narrative in his video. And it's 11 minutes long, and we kind of said that well, we we can't go through people's videos if they're like over a minute long. But anyway, Slowdown did. He gave you really nice feedback here, Rob. And he says like, wow, look at the effort you're putting on. Fantastic. He does have some feedback here, though, that a bit of meandering, maybe without any kind of clear focus while you're scanning for your flag patterns. So then he has suggestions in here as you go through your looking for these flag patterns. Consider your image checklist, and he made one for you here. And this is actually his style. And this is, again, like, this is the beauty here. Different coaches are going to give different feedback here. As you know, Slowdown has a Wyckoff spring pattern that he looks at, that he has studied in detail. And he always shows the kind of diagram or schematic of it so that he knows what he's looking for. This is kind of like burned in his memory. So he's suggesting that you do something like this. And having this checklist in front of you, as you guys know, we have that checklist add-on in Bookmap now, so you can fiddle with it yourself and put in your own criteria for that checklist as well. So use it. This will keep you away from bad trades. It will make you focus more on good trades, and then you want to take the good trades and filter out the bad ones. Yeah, use these tools. Yeah, he says here about these steps, going through the different steps in here. Step one requires a consolidation that is trapping traders. If we don't have step one, you can sit back and relax. So there's considerations in here from step one to step two to step three. So what Slowdown is suggesting here is like go through one. If you don't see one, then maybe you're not looking for two at this point then. Okay, and this will filter out. You can still get a flag pattern without the consolidation, but it just works way better with it. I mean, we can see that Allan's last trade, for example, probably turned into a flag pattern because it was a pretty strong breakout, and it's going to probably go up to 16 or 160.50 and then pull back and then maybe continue. But anyway, knowing what you're looking for and burning this kind of pattern into your mind of what it is in the order flow you're looking for, and follow through with that one step at a time. Let's see here. He yeah, step by step is his advice in here. So here he went through, and this is during rollover period. As you guys can see, this is you're looking at the H contract here on Monday. So a bit early on Monday. Whoops, sorry about that. Anyway, here's you can see this consolidation pattern in here, and then your breakout, and then on some strong volume in here. You can kind of see it. It's kind of messy in here, and then your pullback, and then looking for that continuation again. Anyway, start to identify maybe in terms of the steps what you're looking for. So I actually had this suggestion for you, Rob, as well, because like even the flag pattern in here, like you're looking for consolidation, the trap traders identifying them, looking for that impulse move, that strong move up into high liquidity here, right? And it does it. It does it in here. It's not much of a move here. It does look like it's on some strong volume, and then the pullback though is also pretty steep. It comes back, pretty harsh here, uh, and then you're again though looking for those buyers to curl in and then take it up further toward your targets. Anyway, just step by step, look for these things and identify them. It should help the filtering process to stay away from some of the um, uh, bad trades. Rob, are you in here? Would you like the mic? Maybe you can walk through a little bit.
Okay, can you hear me?
Yeah, there you are. And here's your video too, which I'll paste into the chat for people.
Yeah, I gotta figure out ways to make it no longer than a few minutes. I've had some of them where I go on for an hour. Uh,
Yeah. Well, I mean, whatever's helping, whatever helps your process. If that's helpful for you, talking it through, um, continue on. Oh,
yeah, I'm just yeah, I'll try to take that advice Stan put on there with the what you were just showing.
okay.
Uh, I'm just kind of stuck right now. The last few days, I've just been wondering where I'm at with the whole thing. So I just got to go back and rethink things.
Why is that, Rob? I mean,
There's parts like I know it seems like other people get this down easier. I'm just the kind of person I'm not good at journaling things. I I've always struggled with trying to back test something because then I always go, oops, at some point in the process I messed up, so I got to throw the whole thing out and start over and think about, how did I mess up on gathering the results? And so I just keep throwing it out and starting over and throwing it out and starting over.
hmm.
And I've never gotten to the point where I have any defined process and plan. So I'm just, I
Yeah.
just really struggle with the, I want to get to the point where I have a plan. I know exactly what it is, and I'm going to repeat it over and over and back test it, determine if I have that edge and the probability or not.
Yeah. I mean, there's a few ways to go about this, and actually, it's funny. You mentioned this. This is something that Allan years ago had mentioned. Um, in the all markets webinar, basically, that reading the order flow in real time, and his question, and I got the question a lot, is like, oh, that's great, Bruce, but like, where do you get in? And how do you manage it? And it's like, okay, all right, let's take a step back and let's go over it. Uh, and um, uh, and this, just look for small wins, right? Build confidence. So simplify it. Now you're not looking to knock this out of the park. You're just looking for, I mean, like close to break even. Try to be profitable, but close to break even, certainly no big losses, and that can be a hard habit to break. But anyway, that I remember you talking about studying this flag pattern, and then I was encouraging you just to look for just that first impulse move, kind of like what Allan had in that last image, and just look for that. Get good at that. and then kind of get into the details of each one, because I can't stand like calling this a flag pattern. It kind of drives me nuts. Like it's the order flow within this is what we really want to understand. And there's so many of these impulse moves in here. It's like, well, who's in control, right? There's buyers here, right? Look at this little pullback in here. Let's just zoom in here a bit. Mostly buyers, kind of trickles back on a pullback. Buyers again, kind of trickles back on a pullback. And it goes up, but it takes its time in here. It goes into a really big consolidation, and then you can see these little areas in here where it's bashing on one side. Here's your slowdown spring trade, taking it back up to the top of the range, holding it, looking for a breakout. Doesn't get it until later, but again, noticing the stronger moves. And then you can look for that just really simple idea of, is it auctioning off up here? And if it can again after pulling back, and you see maybe a flip in the order book from offer to bid, and you get volume in here, it's most likely going to come up and trade through and break out from the area, and you would be anticipating this strong move. So just maybe less steps would be easier. I don't know if that helps or makes sense.
To
Yeah,
kind
I
of
want
add
to
in,
narrow it down to the simplest approach that I can, so that I can try to do it the same every time.
Yeah.
So that I can, I have to determine, do I have any sort of an edge, and I have to have it narrowed down to the least number of steps. I'm trying to just use a naked chart with no indicators. I've tried messing around with the CVD and the market pulse, the volume pressure imbalance. I find I can't really find anything in it that I understand yet.
for this particular setup that we see right here, I agree with Bruce. I think the flag pattern is not necessarily a great name for this. To me, what this is a consolidation breakout retest. You get the consolidation in the yellow box. You get exactly what Bruce is talking about, the auctioning. You finally get that breakout. And then what happens? Price comes right back and retests that level. And then there's no continuation from there. So where would you be looking if you don't get any continuation down? You'd be looking to try and retake that high, that previous swing high. That is the trade I would be looking at trying to get. You'll see consolidation patterns, and you can see them. And me and Bruce have talked about this for hours together. You can see these at every single time frame, whether you're in the 30-minute time frame or you're zoomed into the 5-minute or even the micro time frames. We've found them. You can see these exact concepts. So you can look for these kinds of things, and that's what I would look at. I would look at the consolidation, because you can identify consolidation over a decent period of time. You can clearly see it with a box visually, no indicators needed. You can see a break of that consolidation very clearly. Generally, it's with volume. And then you can tell when you've come back and retested it. So then when you get that long opportunity, or if it's flipped over and you get that short opportunity, you have an area. And now where would you place your target in that particular setup? Be conservative, like Bruce said. You don't need to be knocking it out of the park. Aim for where the swing was, where that number 3 is on this particular one. I'd go a couple of ticks short of it. That way you're still just getting a little bit there. By working through those concepts over and over again, you'll start internalizing this, and then you'll start seeing it in other areas, and then you can start moving on to something else. Narrow it down one thing at a time. It's just like walking. You can't chew gum yet. So just work on those things. Don't worry about a ton of statistics and everything else. Just go through paper trading. There's nothing wrong with it. Every strategy that I've ever implemented over the course of my entire trading career, I have put dozens and dozens and dozens of hours just simulating that particular strategy. So there's nothing wrong with any of those things. So that's what I would look at. I wouldn't look at trying to like over backtest stuff. If you're not a programmer, it's not easy to do. You need help. But you can if you want to go that route. It's an in-depth process. And there's a lot of people that can help you out with those things.
Hey, Bruce, I just wanted to. You hear me?
Yeah.
I just have a message for Rob. I don't know. I heard this saying. I don't know. It was on a sports show actually, and they're talking about which players should be traded to who and this, and which should get the most value. And it was Max Kellerman. And he said the line was, "Perfection is the enemy of the good." So meaning like whatever player that we're going to trade, you're not going to get the perfect thing back, whatever. So like just so sometimes trying to be perfect is like even defeats exactly what you're trying to do. You end up getting overwhelmed. I mean, I should give myself the same pep talk sometimes, but I just wanted to give that line. The perfection is the enemy of the good. If that makes any sense to anyone but me.
Yeah. Pete is saying the same thing, and Pete, we can open the mic for you if you like. Pete's a very, very experienced trader, and heck, we should bring him in here as a coach as well, Pete. So
Well, question here that I've got is, I have a Trade-Ovate connected to my Bookmap, and they have a, performance center thing, and it tracks all of these statistics of your trades. Since I can't figure out what I'm doing with the back testing, I mean, I can just do the trades and just track my performance on that thing, but I can't go far back and collect a sample of like 100 or 200 trades. That's something I've heard people talk about also, looking in the past for your setups and going, okay, I can break down these statistics and figure out, do I have an edge that way? I mean, I can do my stuff going forward. I have a pretty good setup with that thing. It automatically tracks it. I mean, for anybody in here that's got Trade-Ovate, you know what I'm talking about. It's got all the pie graphs and
yeah,
tracks all these different statistics about it. It's just going forward. I mean, because I can't figure out what I'm doing with the back testing. That's like you got to be able to program stuff and use Excel and all that. That's
just
I'm
take
not
some
that
of
great
these
at
moves,
that.
Rob. I mean, like if you notice, like you go through your steps, like it's come from an uptrend. You see this consolidation and back and forth. Now, because it's being rollover, you're not getting too much out of the order book in here, except for confusion. Maybe a little bit of liquidity in some of these levels, but and then again, starting to kind of understand, like, look, it came from an uptrend. There's buyers up in here. There's some selling, good cluster of selling here, but buyers are back here, and they're back here, and this is your lower high here. This is looking pretty good. And this is actually one of your trade ideas of kind of a move back to point of control, right? Or the kind of middle of this range in here, which it is going to be a high volume node, typically is, and a bounce off of it. Look for the volume to come in, and you can, depending on what your risk tolerance is in here, or maybe a measured move up into a higher level. Jack has a good point with the breakout, bounce off, pull back, and continuation back up to at least the top. So, I mean, these are measurable things. Just
Yeah,
really
I can see
simple.
number 4 testing on top of that consolidation there. You have all those pivot points on top in the yellow box, and then 4 is, came up, went to 3. 4 comes down and it tests on top of that consolidation,
Yeah, yeah,
and then continues to go up.
yeah, exactly. So anyway, there's a lot of very simple ways to start to measure these things, and again, take your screenshot, measure them, put it into an Excel spreadsheet, take your link here from Discord and put it into that Excel spreadsheet too. You know, or maybe you want to put it like in here the way that Slowdown has done it in Notion, you know, and journalize this way as well. You know, and you can have your just notes down here. It went this many points. This was how wide was this? You know, how many points did it go up? How many points did it pull back? Where would my entry have been? Where would my stop have been? Where would my take profit have been? And you can start to build it out this way. You know, just get one or two to begin with, and take it further. Anyway, guys, I don't want to keep you guys too late, and I want to move on to a DNT matter. So if unless you had any other comments, Rob.
Oh, that's fine. Thanks for your input, guys.
All right, thanks, Rob. Really tremendous effort. And hey, you know, it's not easy. I mean, there's setbacks along the way, but keep going. I mean, you're I mean, I see dramatic improvement. So
Yeah, I mean, my God, it just drives me nuts like nothing else. Just makes me want to slam my head into the wall every day.
that that can be trading. So anyway, let's move on to a DNT matter and also a flag pattern in here. And he caught a really nice one in here. So I too agree with a Slowdown's approach here. It really nice documentation, clean and clear. You're focused. You know what you're looking for. This is in DNT. We've talked about this. This is going to make you, you know, graduate into the Bookmap Academy. So this kind of documentation, this kind of clarity, this kind of focus, it's high quality content. Keep it up, and then it's just quantitative at that point. You know, one per day, and then you know, look at how much better this is now. It's really great. So yeah, so let's go through maybe some of the comments here from Slowdown. We'll take a look at the image, and also we'll open the mic for you. I think you're in here, right? Maybe not. All right. So let's see. Yeah, again, like Slowdown, he's just a big fan of this as a, you know, as his own trading method here. You know, he wants to see this, what he's looking for in the diagram, okay, and then relate that to the chart here. And this is really a very powerful way. It's like, this is what I'm looking for. Is it doing something like this? Right? And then you've got your checklist here. Now this is probably a really good idea to keep this diagram, either print it out or have it on another screen or something to know what you're looking for. And you already have the checklist though, capabilities with that setups checklist tool in Bookmap. So let's see here. Yeah, he's added in the diagram. Perhaps seeing this added in your chart might help others watching ways to engage the market. Yeah, once the context changes. Yeah, so let's take a look in here and see what you got. So okay, so open back high inside yesterday's range. Selling dominant first 30 minutes. IB30 still open. IB60 stat open soon. Okay, you've got your consolidation in here, and okay, you've got your VPOC here yesterday's, and yeah, this is great. You've got your kind of wedge pattern in here. You've got the break here, but it's still not really clear. Like you got the retest and a break. It actually should be breaking here. You know, after auctioning here a few times and then pretty strong move, pretty strong pullback, but on low volume and a pretty strong move again. Anyway, it pulls all the way back here once more, and kind of leaves you a little bit bewildered, it looks like, at least to me. But once you see this starting to come in again, it's like it's worth it, you know. It's looking really good to break, and at least come up to here. Most likely come up to next one, and you know, actually you're targeting up here at 45.90. Yeah, nice image, nice capture here. I like the way you're looking at the two-sided trade here. Either side could be taken out, but you're looking for the outside edge and scale at the mean. Okay, so this is getting a little more advanced with the scaling, but this is once you know kind of what you're looking for. One of the benefits of well, scaling in or scaling out, I mean, is to constantly adjust your risk. Okay, especially scaling in is now it's more of an advanced method, but that's one of the edges we have as day traders, is to be able to do that. When we know what we're looking for and it really starts to show, you can push your edge as long as you can maintain your risk. Because you're looking for something high probability, and why not ramp it up if you can? Right. So anyway, very clean, very clear. You know what you're looking for. I like this little pullback in here. Kind of quite a bit of selling in here, but it auctions back up again, and we've seen this move so many times. Once you know, these sellers are thinking, oh yeah, I'm gonna, you know, sell it back to here or back to the mean, and then the buyers come back in again, and this is where you can get a really nice move on the second move. So anyway, good stuff in there, and that's all I have. D&T, I don't know if you're in here, but can you guys still see my screen in here?
Yep.
Okay. Says it.
One of the things about this particular one that I found interesting was that those two buy side breaks before it breaks that consolidation pattern were really, really close. They could trap you there on the D&T one.
Yeah. I mean, you know, especially with you get a visual bias here with the trend line here.
Yeah.
I mean, it really looks like it should break here. It just doesn't, you know.
If I was looking for a consolidation pattern, I might have entered early there. So
yeah.
But my stops would have been at the swings below, so below the consolidation pattern. That's what I would have accounted for. So it would have eventually worked out, but it would have been underwater for a little while.
Yeah. I mean, this is kind of a little bit of nervousness in there for me, for sure.
Yeah, and I don't see any psychological level there. There is the higher time frame stuff. So that's me just kind of looking at the image from the chat. But it's a decent flag, or not a flag, but a consolidation pullback. It's just a small pullback.
Yeah, right.
It's interesting.
I mean, there's a couple in here. There's one here, and then a bigger one in here.
Yeah, that's the classic M pattern that I have a friend who trades. He would have entered long on that from the very bottom and would have loved it because it just rallied up. Because he looks for those little M's all the time. I don't know. He's weird.
So all right, so let's move on. Steven, we got an image for you, a couple images it looks like, and then Slowdown actually wanted to, he had a flag pattern that he wanted to show. You know, notes, really cleaned up your images in here. You know, great analysis, and you know, it's looking much cleaner and better. I mean, my God, Steven, do you remember what your charts look like, you know, like I don't know, 2 months ago? So a big distinction. Again, like, you know, he's very consistent in here, like throwing on top of this, knowing what you're looking for. So this, and Rob, this is actually one of the things that exactly what you were talking about. Like, how do you know what you're looking for? How do you not get confused by it? Well, just keep looking for this thing and identify it. And you don't have to go with my image or whatever it is. You can go with your own. In fact, it's better if you go with your own instead of rely on someone else's image or content. What are you looking for that works? I've seen this one from you a million times, Rob, where I know what you're looking for. You're looking for this kind of consolidate. Let me try to find something else here. Hold on. Here, let's use a Google sheet here. All right. So you're looking for something like this. Your consolidation, your big breakout, right? Or even if it might do something like that, and then it might come all the way back down here, right? And then you're looking for this. Okay. I mean, you've looked at this a lot of times, right? Now, this seems to resonate with you. Okay, so make a diagram of what you're looking for in here, and try that. So what are you looking for exactly? Obviously, or I would imagine you're looking for your big dots up here, taking this higher, and probably small ones on the way back down. Okay, and you know that this is going to be your point of control. This is going to be your at least highest traded level in here, and then you're looking for a bounce off of that. Just note that one of the things in here on this pattern is that this can also, and you might want to look at this, when does it fail? Because a lot of times you might get this little bounce like this and then it dumps hard. And you're really looking for those big dots on the other side here. And these can be really nice nice winners. And it makes sense of what's going on in here in terms of the structure and the transactions. Look for the order flow too. So what are you seeing in here? Is there a lot on the bid here? Do traders trade into it? Is it exhausting out here? Are the buyers curling back in here? Like, these kinds of things will make it much cleaner for you, and likely improve that probability a lot. So just some considerations. Yeah, let me go back to Stephen, your image in here. Okay, so yeah, beauty in here on the okay. I love that you're using the delta in here. You've got your trap traders. You see your move through into and through high liquidity. You're identifying the strong move in here. It's also kind of got a strong structure in here. Finally, or slightly higher highs, slightly higher lows in here. And then you start to see that auctioning again after these little pullbacks in here. It's looking good for a breakout in here. Boy, I don't know. This is a lot of liquidity in here. But I don't see, you see a little bit of a pullback in here, but you start to see the buyers come back in. So maybe you can hold on to that. Maybe you take some off here. You don't get much out of it, but it ultimately goes through. You can even see the pullback off the top of that, and then another nice move starting to emerge right here. Okay, so you're identifying strong volume. This is great. You got your trap traders. This is great. Beauty. You're starting to fill out your check off the list here. Stephen, let's give you the mic. Oh, okay. All right. Next time. Do you have the capability, or is it just too many people in the on the stage here? Okay. All right. It's too much noise. Okay. All right. Well, no problem. So let's go back here. Yeah, I would agree with a slowdown on this. The pullback's a bit too deep, but otherwise, beauty. You're recognizing the things, checking off your list. So let's see. Then image number 2 here, right? So a good example of highlighting your common elements of the order flow. This is where you came from, right? And what you were going through. And this is an important part of the process. Jack, I don't know, you jump in here at any time. I mean, like, first identifying order flow elements and then starting to focus on what you're looking for, right? You're going to put some kind of order into that chaos here that you're starting to see. And as Slowdown mentions here, identifying these elements through screenshots eventually translates into real-time readings that can really help stay aligned with the dominant side. So good job in to identifying where context might be shifting and why. Eventually seeing this in real time becomes second nature. Nicely done. Okay, so this is your images. This is even a vast improvement from where you came from a few months ago, but it's still a more focused, but you're identifying a lot of stuff in here. That's fine. It's just like, you look at the difference here of what you're looking for. So good stuff. Yeah, this is really nice in here too. Look at that book on the other side with the buyers coming in. This is more of a reversal and kind of head and shoulders that you guys can see. I'll be covering this in the next one. I just want to note something in here on this one in here on the head. This kind of head and shoulders is actually a pretty good example. You've got shoulder, I don't know, head and shoulder, I guess, and it's kind of skewed. But look at this in here. I want to go through this and take the time. I'm sorry, I know it's already gone an hour and a half. We only have one more image, but we got Crash as well. I don't feel so bad, Crash, keeping you until the end here, because at least you're on Pacific time. So you're 3 hours behind. Look at this, guys, like right here at the head. You'll see this a lot. It's just a stark difference of what's going on in here. Look at the volume here. Look at the volume here. Okay, so this is selling. This on the other side is buying. Now we don't know that, but you can start to see that unfold in here. And then, look at other elements in here as well. Are we starting to break structure? Are we getting higher highs? Is it auctioning again? And look at this beautiful flip here. Offer. They were on the bid before the offer, actually. So really supporting this, pushing this. What's the reaction to this? Buyers, right? So we're still looking for this to go higher. Yeah, this is a real nice image, actually, and a lot of things to kind of identify in here. Some simple things too. I mean, you're identifying a lot of different things. Boy, I mean, like in terms of reversal pattern, you can pretty much stop with some of these things. I would say like this area getting filled. It would be a lot better to see like high liquidity getting filled in these areas here as well. But this bid is so strong, and the reaction to this really strong bid down here is buyers. This is it's got a lot of nice elements in here for a reversal pattern. In fact, I gotta find out what day this is. Maybe I'll cover that one. Yeah, let me know. All right, so one more, and then we can go over, turn it over to Crash and point to an image. Let's see. Okay, so yeah, he's looking for the same thing, and he's kind of, basically showing that putting it to the test in here. This is what he's looking for, and then here's what he's looking for in his pattern. Here's his checklist, and then he's starting to mark them off in here. Okay, strong move up into high liquidity, measured move, your pullback in here into liquidity in here. Beautiful. This is really nice. Again, strong move starting to curl back in. Okay, I'm kind of surprised to see this little bit of a hiccup in here, but yeah, I'd be looking for this to continue on up. It's just there's a lot of buy volume in here. Look at the buy volume in these areas. So let's see here. Right. Okay, Dan. So we can only have 5 speakers in here. So at a time, maybe Allan and okay, there we go. Maybe Allan can drop and Stan. Feel free to jump in, Stan. You're on rotation this time. We'll be talking to you next time. But if you have any comments in here.
No, that's good. All right, no way. I will hear. See you next.
Okay. Thanks, Stan.
Perfect.
And guys, that's all I have, or that's all Slowdown has. Crash, anything that you want to share with us?
Yeah, hey everybody, how you doing?
Doing all right.
So good. Well, it's obviously been a lengthy day, so I don't want to really take too much time. I guess I will just briefly cover just a couple points. I think everybody saw my slide. Are you able to share
Yeah.
what I point to, or do you want me to do it?
Well,
Bruce?
do you want to show me where, like in Discord? I can
Yeah,
show that.
why don't you go into Bookmap or Blue Jacket, the Blue Jacket room?
Okay.
And I just want to briefly cover
Hold on,
the
just
slide I did with the overview right after the down a Blue Jacket, a little bit lower. Right there,
here.
right down.
Yeah.
There you go. Yep. And maybe just go up a couple slides to my overall summary that I say please review.
Ah, right. Yeah.
Remember how many I posted
Boy.
since then.
Yeah, you've been busy.
What's
posting.
the date of that? Yeah, no, it's probably lower actually. What's the date on those? I can't see your screen.
This is the 26th of October. So yeah, it must be way down here.
There we go. Okay, so go up just a little bit. Right, next one up, I think.
Yeah, this one?
Right there.
Okay.
Yep. I just want to make sure that people don't get confused on the type of trading. You know, it's when you do a presentation or you just give a couple slides, sometimes you may not see the big picture because we're in that particular case trying to focus on a specific topic, right? And for me, it was predominantly trying to show Market Pulse DPI as the specific tool within the Market Pulse suite of options. And I just want to make sure, you know, because you made a comment, I had a whole bunch of people DM me, and I don't want people to start trying to catch a falling knife. And sometimes it does look like maybe, you know, you're trying to catch a falling knife in some of the setups. But in general, I'm a first pullback type kind of guy. My pullbacks will either have to do with a Wyckoff Spring breakout, right? Kind of like the examples that we've already been reviewing. It might be a setup that's on a 15 or a 5-minute setup that I have that coincides with something else. So in this particular case right here, right, you can see the market open with a strong move up. And I was looking for the pullback after it kind of just did that first move up back into the EWAP there, the white line, to pick the continuation of the trend. So when I give my particular slides, though, and I zoom into that kind of stuff to show the Market Pulse VPI, you know, it might look like say I'm catching a falling knife and just picking things purely off of a VPI, but I'm not. I'm using a lot of confluence to employ market pulse to find the specific entry in the area that I want to get into my trade. So in this particular case, right, I see it's a strong move up at the open. It's going to pull back somewhere to the VPOC and then continue with the move up. I will use market pulse on that pullback to find the point of entry right into that trade. Now, this is a very zoomed out view, so you're not going to see my specific markers for getting in. But I just wanted to, again, use this overall as a highlight to show that I do use pullbacks as a predominant way of getting into trades. And I do have some deeply oversold or in sniping situations and consolidation moves, right? I will just use VPI to find a bottom to get a reversal pattern out of there. But zoom out just a little bit again, and let's just see the move continue to go up, right? We come back and we test the VPOC, and then we come back and test VPOC with VWAP there, which is that second arrow. And then we have that really big move up towards where I say use all the tools, including VPI to ID at top. Now, in this particular example, I have a rotation that I use every day from a timing point of view. And so I was actually looking for a major 15-minute pullback here. So if you were just to take that one square shot image, it might look like I'm catching a falling knife, but I have some rules around that 15-minute time frame and some other indicators that are going to be there to find that low. But this is just another example of a very deep pullback, but it's a 15-minute pullback to do another continuation of the trend, which is up. So again, I'm just trying to highlight how I use market rotation timing with different points of confluence from price and price structure, whether it's VPOC, VWAP, to try to get into trades. And you can see that after we made that bounce up to that lower high, we have a double top now with an expected move into my clock's rotation to go down lower. We get an aggressive move down, and now I'm looking for a 5-minute pullback. So that's that green arrow right there moving up. And now I'm looking for an entry with VPI at that 5-minute pullback to go in the continuation of the trend. And you can see there's an M formation there, right? So somebody already, I think Jack already talked about I use M's and W's all the time. This just happens to be a very large M. And you can see that we're going to have a breakdown below the lower price structure of that bottom of the M to take us down into a oversold condition. So in this case, after I sold the 5-minute pullback up, sold it down, now I'm actually looking for a consolidated move into a final low oversold condition. And you can see that we had a massive zone of liquidity right here. We consolidate around and then come back and buy and sell into that big liquidity zone, in which case this is the place where I am potentially catching a falling knife, because in this case I'm looking for a deeply oversold based off of parameters that I have to get into a massive move that will be 50 to 100 points. And the reason I really like the market pulse VPI, particularly at specific lows or highs, is I want to get in on moves that produce 100 points. And the NQ particularly can move 50, 70 to 100 points with no problem at all. So when you're going to pick a bottom like this, so I've done 4 trades already. Initial pullback off the opening range. I did 2 15-minute pullbacks. I did a 5-minute pullback, and now I'm doing a deeply oversold. Of all those trades, the only one where it's really potentially, in my opinion, catching the falling knife is this deeply oversold down here in the bottom right. And that's where it comes into both the art and the science of catching a trade. Now, exit that real quick, and let's go to one more slide from yesterday. So just go down to my charts. There's 3 of them in a row. And
These 3?
These 3 right here. Yep.
Okay.
So start with the first one there just really quick, because that's, again, an overview. And so what I like to do is I have my pre-market brief, like I talked about in my webinar, right? and I want to be able to find market pulse trade entries at key price areas. Those are going to include liquidity zones, and those are going to use what I call it my crashes clock, right? Pre-identified time rotations. So this screen right here is a zoomed out view where at the open pre-market, I draw on my chart where zones are that I think we have the potential to hit. So let's just say price opens up. I can't remember what it is. What's the price on the right there? When we open up at 6:30, it's somewhere around 16,600. Okay, so if somebody tell me what the daily ATR has been for the last 10 days on the NQ? Anybody have a rough idea? You can put it in the chat. Okay, nobody's typing. I'll just tell you, it's around 200 points, right? It's been fluctuating between like 195 and 210. So I look at where the market is for me, Pacific Standard Time, 6 o'clock, so 9 o'clock Eastern, right? 30 minutes before the market opens. I shrink the chart down and I draw in a 200-point range above and below where I think the market's about to open, the liquidity zones. So I map liquidity zones before the market opens. And then on top of that, I mark significant price levels. A lot of people put the overnight highs, right? Overnight high, low, close, or previous days high, low, close. Map all those on there, use a TPO chart, and start getting some clues on where your bull bear line is, right? You have VWAP and VPOC put on here, but you probably need to put some other lines on your chart and know where those are. So in this example, if you scroll down on this particular slide, you'll see, just go lower time-wise. So you can see that in my particular style of trading, I'm not trying to sell my proprietary thing. I'm just letting you know I have a time frame. So you see that low, high, low there at the beginning, and then another low, high up at the top right. I have predicted time frames where I am looking for measured moves to get into an entry. And in this particular case, we had the FOMC yesterday, right? So you can see right there that the FOMC shot right above the VWAP line. And if you look at the first pullback to enter the long trade in continuation of the trend, you can see in that pink box right there, right? We came up and we hit pre-identified liquidity zones, and we have our first potential pullback to look into a continuation of the trend to move up into a higher liquidity zones or other prices that we are expecting from our pre-market research. So now look at the next slide. So that's kind of the big picture right there, right? So now go to slide number 2. So what's the time on that right there? On that particular graph, we're looking at right after the market opened. So you could tell that from the graph that I had made there pre-market that I was expecting the opening range low or the opening range move to make a low and to reverse itself. So now I take pre-planned market liquidity zones that you see there at the time frame where I expect an opening range move to reverse its direction, just based off of my experience. You can see the volume decreasing. You can see that we're coming down into 2 major pre-identified liquidity zones. And now we have market pulse down there showing an entry location that I will then start to leg into a trade. Now, I know a lot of people don't like to trade like this, and that's okay. There's 1,000 ways to skin a cat, but what I'm doing is showing you how I am using market pulse tools to get in for big moves. And right here, I give you 2 examples. One location where the CVD is co-joined with the market pulse spike, and I say, why not buy here? And the reason I don't buy on that left one, even though it meets part of my criteria, is I see the liquidity zones already below me. So I'm not going to go buy most of the time a VPI spike with a co-joined CVD unless I'm at a point of confluence with a couple other things. And in this case, my checklist has been met, right? Right above the screen there, you can see my long criteria is I have my pre-identified time frame. I have sell sweeps into sell stops. I have large sell volume down into the liquidity zone that I already pre-identified. And now I'm capping it off with the market pulse VPI with the CVD adjoined, all in my point of confluence. And that's how I decide to leg in to my trade right there. Now, if you look at that and you kind of draw a picture in a more expanded view of your mind, you're kind of getting a W here, right? So now, if you're not comfortable with buying that VPI spike down there the way I do, I leg in, then wait for the breakout of the top of this W kind of consolidation pattern at the bottom here. Yeah, right where your mouse is, right? Now you break above the consolidation W formation at VPOC. Now you get into the trade there, or you leg in with, let's say I did 3 micros down at the bottom. I'll do another 3 micros there when I break out of that W formation, bouncing above VPOC. And you can see that we went above VPOC, we came down, tested it one more time, and then it was off to the races to go find the other liquidity zones that we see there. And again, this ties in with, Tom B and other people's trades with mean reversion back to VPOC or VWAP. And that's what occurred down here. I had Market Pulse help me identify the very specific entry I am looking for with a mean reversion back to VPOC, VWAP, and then other levels that I'll try to find. Okay, let's just quickly go to slide 3 and then we'll be done. The next slide down. That was 7 o'clock in the morning. Now we're going to go to about an 11 o'clock time frame. And on this example, I am looking for a first pullback move. So in the very first slide I showed you that pink square on a very zoomed out view where we had the FOMC reaction up to pre-identified liquidity zones. And in this case, I am trying to find where I want to enter my first pullback into a continuation of the trend. So a couple things I've been starting to play around with on this particular slide is looking at price change in addition to the VPI a little bit more. And you can see let's just read the bottom part and then we'll have you go up to the middle consolidation zone there. But you can see I have the price change line, all the green tops staying above the 0 price line, right? It's identified in that square rectangle. And you can see that price change is very strong above the 0 line on that sub graph. Now you look at Market Pulse and CVD. What are they doing in comparison to price change? CVD is continuing to come down left to right to a low, right? We get a little bit of a larger sell volume there in the middle, right below VPOC. And you can see where I say leg in, where the Market Pulse VPI spike co-joins with the CVD. All right, now go up just a little bit to the top of, so you can see the consolidation zone there. So you can see that we're coming in here, hitting the left or the right side of 2 pre-identified liquidity zones. And then we have the larger, bigger one right across the top. And that liquidity zone right across the top is right above a consolidation zone. And you can see that this is a Wyckoff spring action. Now, what you see in here, in addition to the Wyckoff spring, right, you have a little peekaboo down at the bottom, but you also have a bunch of sell sweeps, right, that are not driving price anywhere. You're not getting big, huge sell stop runs off of those sweeps. They're staying within the consolidation pattern. You got the VPI spike, you get the peekaboo. Now you decide, where do you want to buy? Do you want to leg in on the spike of the VPI? Or do you want to use the right-sided pivot rule where I have the peekaboo and then I have a bounce up to the top of the consolidation window? It pulls back just a little bit, but it makes a higher low. You could leg in there depending on how you want to skin the cat. Or you can wait for the breakout of that consolidation zone, right, to get that impulse move that we've just seen in 3 or 4 examples above us, where we get a Wyckoff spring with an impulse move, a pullback, and then a continuation of the impulse move. And that's basically what happens here, right? So for me, I really, really, really like to use the VPI with the CVD and all those other things we just talked about, because now look at where I'm getting in at a price. I'm getting in down at the bottom of the consolidation zone. And where is that price there to the right of the screen? That's around 16,647. So I'm getting in around 647, If you bought the breakout, you're up at 662, right? So I'm getting 15 to 20 points more on my trade by using the market pulse VPI in a very systematic way to get more points out of the trade. Now, again, this is not for everybody, but if you're going to do it, I say you test the water in sim. You just start off using a couple little micros in the NQ, and you start to get a feel for where you want to leg in on volume. And you can see the volume down there at the points where I say to leg in. So you get the peaky boo, bottom spike in, I'll leg in there. I get a volume spike with the higher low, I'll leg in there. I get the breakout, right? With some more volume, I can leg in there and continue the trade. Now, that particular leg where I bought in up to the first point before it actually gives you the pullback, so you get the first impulse move. That first impulse move was 65 points. 65 points. Then you get the pullback, right? Back into the top of the consolidation zone, and you break back up again. So you could have gotten out at the top at 65 points, let it come back, show you that it's making another W right here at the top of the consolidation zone, never breaks it, buy that breakout, and then it ran another 100 points. So there's a lot of different ways to use the market pulse here, in my opinion, just using a few micros every single time, but getting 20, 30, 40, 50 points. So, okay, you want to wait for the breakout, impulse move, first pullback, whatever, and you want to trade, three minis. Well, I'd rather leg in 3 micros, 3 micros, 3 micros, and carry it for 165 points because it's a very low stress trade for me because I'm not going in with huge size my leg-in points. So again, everybody has to decide how they want to trade, but that's just my view of a trade yesterday with the FOMC trade. So hopefully that all made sense with staying in the continuation of the trend for the majority of the time, how I catch the pullbacks and then continue on with the move. So any questions?
Yeah, any questions, anybody? Let's see here.
The first trade was at 7 o'clock my time, so 10 o'clock in the morning. The second trade, which was the pullback after the FOMC, was around 11 my time, Pacific Standard. If you go to the Allan, if you go to the chart in either Blue Jacket or Bookmap Academy, you can look a little closer. The times are down there at the bottom between the main graph and the subgraph. Just kind of hidden by some of the drawings there on the volume. And you can see, right, that is actually a zoomed out view because I have 1 minute ticks there. So it's 11 o'clock, 11:01, 11:02, 11:03. So I agree with Jack in that you got to kind of get into the minutia sometimes. My personal technique, I am constantly zooming in and out on Bookmap because things do shift, particularly in the subgraph. If you're zoomed out on a 15-minute window, the VPI spike and the co-join CVD, for example, look a little bit differently than if you're on a 1 minute or a 5 minute time frame. So you do have to play around with it and get used to the nuances of the visual representation of those market pulse indicators on different time frames, and they will make a difference. But this is on a 1 minute chart right here, so very easy to see the specifics. And that's what I do when I'm trying to catch it. I get the big picture, I zoom in, and then I go down to a 1 minute time frame, and now I'm picking my specific entry point with the market pulse VPI, CVD, and now looking a little bit more at price change.
Yeah, so Crash, I had a couple questions because what was it? I think you had presented, and then the next day, like maybe I think I jumped in and during the all markets webinar and said like, here's how Crash is. He had a great presentation yesterday. This is what he's doing. And then I wanted to cover a different way of looking at market pulse, not with extreme readings in it, but more of kind of like looking at an average, when it's trending.
Yeah.
So and one of the reasons why I wanted to show that was because, um, you know, when you covered it in detail in your webinar, that you were looking for this host of confluences, and then but it looks like you're kind of like really kind of throwing money at a falling knife, and that's why like it looks like you came in here and said, no, I'm looking at something very specific, and it is a pullback in an uptrend. And you're still getting these like confluences that you're looking for in here, or very high probability trades. I just wanted to reiterate that because it looks like that it's like, oh my God, why would I ever buy there? But you have these specific things you're looking for, and you're in an uptrend, and that
Yeah.
makes a big distinction.
Yeah, and I think you did fair justice by what you tried to say during the webinar, because I don't want people to just go around trying to catch a falling knife, or a shooting star with market pulse VPI either. It just kind of, I think what ended up happening was I gave so many examples where it looked like that, and we didn't have it in the context
Yeah.
of the bigger picture, pullbacks and stuff, because I didn't really show it from that angle. I was just showing the microcosmic view of what it looks like when I enter in a trade with market pulse. So I do think it probably came across as I'm bottom fishing, right? Catching falling knives. So that's why now, and in that first slide that I did after the webinar, I want to show the big picture where I'm looking for the pullbacks to catch the continuation of the trade. And then I zoom in. And when you zoom in, it could, to some people who don't understand this or haven't studied it for the hours that some of us have, that it maybe still looks like it's, catching a falling knife. But, I've posted dozens and dozens of these trades now inside of the Blue Jacket competition and the Bookmap Academy channel. And I think if you go and really study the criteria, it's not that hard. And if you have several points of confluence, it's really not catching a falling knife. Most of the time, you could look at today, for example, where we had that real massive move down at 2 o'clock today. I did a trade on that, and that's like catching a falling knife. But you had other points of confluence like Fibonacci levels. You had an S1 level. You had several other things that led you to believe. You had gap fill locations. So there's a lot of things I use in confluence. And so, I know a lot of people want to keep it very basic, and just look at Bookmap to make trades. And again, Bookmap is my favorite trick of the trade, right? It's my favorite tool in the toolbox. But I am never going to tell anybody to be a one-trick pony. I don't want to just use Bookmap. I don't want to just use a 1-minute chart. I want to use a 10-4 Renko chart. I want to use different price levels. I do want to use some indicators. I love Fibonacci. I'm very, 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 very successful with Fibonacci's and liquidity zones with market pulse. I mean, those things match so well together. It's unbelievable. So, I would say master multiple tools to use to find points of confluence with Bookmap, and all it does is make you ring the register every day by doing that. So get good at a couple different things, a couple different trades, a couple different indicators or prices or whatever you want to do. Wyckoff spring models here. There's a lot of things you can do. I mean, you could sit here and say, I'm not really catching a falling knife here because here's a perfect example of a spring action on during the pullback. So we had the climb from left to right off of the FOMC into major structure of liquidity that we pre-identified. Now we have a consolidation zone. I'm just finding the low with market pulse in this consolidation point to find my long entry in the continuation of the trend. So a lot of different things you can use to put together, right? It's a treasure map. Follow the yellow brick road, Dorothy.
All right. All right. Well, uh, yeah, that sounds fantastic, Crash. I have no other comments. I don't know if Jack or Stan or anyone else has any comments in here or last questions. We can wrap it up. Looks like Stephen is writing. Oh, all right, Alan, if you can mute, I think you got some music on.
Oh, sorry.
Let's go.
All right, all right.
Oh,
Well,
Alexa has this new setting. Just put the music on every day, 6. Just quick question, Crash. Like, what gave you the confidence to enter FOMC just like 5 minutes into it? Because like it scares the crap out of me. Like it just moves so fast, and then like when you look at it like in the big picture, I always like kick myself. Like you see, but I'm always paranoid of it because like at any second it can just like blow up right back in your face.
Yeah. Well, I'm going to answer a question with asking a question. Do you trade every day, and how much do you watch the markets? So, for example, in the last 4 weeks, longer than that actually, but let's just say in the last 4 weeks, for almost every news event, where has price gone?
Up.
Yeah, right. Bad news goes up, good news goes up. It doesn't matter. They are wanting to give us Christmas rally, right? The Fed wants to look good. He doesn't want things to look bad on his watch. So, in my opinion, they're propping the market up. And so, number one, I'm just looking at the last couple of weeks of news events. Every single time there's news, it jams up.
Yeah, yep.
Right. And so you got a lot of things. When you looked at the price liquidity zones, my slide number 1, I had more liquidity zones at the opening range, the pre-market studying that I did. I had more liquidity zones above me than I did below me. So that makes me have another feeling that it wants to go up and tag those liquidity zones.
Well,
right?
which liquidity zones did you study?
If you looked at slide 1 that I had gone over with Bruce here, you know, I
Like from the day before or the week before? Like what?
Yeah, you see all those, right? Again, like I said, I look at where I think price is going to open, and then I go a plus or minus, 150, 200 points above and below the market, and try to draw, or either on this chart or another chart, write down where the liquidity zones are to get a feel for where the market might want to go during the day, during the full ATR rotation of the market.
What do you base that on? Like previous day or whatever?
ATR.
Yeah, if you go on a daily chart, okay, and you type in and you put in the indicator for ATR, and you use like a 10-day moving average, it'll show you that it's roughly 200 points daily move top to bottom.
We still can't put that on Bookmap, right?
No.
Well, when you open
is
up,
that in the works? Is that one day
No.
possible?
No, not now.
When you open up Bookmap, you can say look back 24 hours and load historical data, right?
I used to like think of yeah. Okay, yeah, 24 hours. Yeah, I'm familiar with that.
Okay, so that's what I do. I go back 24 hours, and then I zoom out and I zoom in, and I physically write down or draw where liquidity zones are. So like I have a 1-minute chart. So whatever I see on, because I don't trade through the Bookmap platform. So I trade on Sierra chart, on another chart, and I take the liquidity zones that I see on Bookmap, and I actually draw them on my 1-minute chart. So all day long, I'm looking back and forth between the Bookmap chart and my trading charts, and looking at them that way.
This is what you do on a daily basis, not just because it was FOMC. You just use that maybe a little bit more, but that's more or less what you do every day.
I do this every single day. Exact same thing every single day.
Yeah. So the FOMC was also part of intuition.
And seeing market reaction, right? I mean, market gives you a tell, right? You get a lot of volume. You break out. mean, look to the left. On this particular example, well, show both, right? Show that, scroll to the right just a little bit so we can see the most recent highs there. So that label of high. Okay. So pre-FOMC, right? We trend down pre-market left to right from where it says that high down to the FOMC spot, which is that big spike there. FOMC spike takes it right into all those liquidity zones, and
Yeah.
it breaks the most recent highs. So now you've broken the most recent highs, hitting the right side of these liquidity zones, with more liquidity zones above you, with the historical,
Like
4
core
week
became resistance, all type of thing.
price is jamming up. So now I'm telling myself, well, I broke above VWAP, and I'm skirting the sides of liquidity, and I broke out above the most recent high. I'm going to look for the first pullback. That first pullback, guess where it comes? It comes down and lands right above liquidity zones we just busted through. Right? So it's just putting all the pieces together to buy that pullback right there.
And you draw these empty boxes on Bookmap itself, like, or you do it on a separate, like.
No, I actually am drawing them on my 1 minute chart. When I'm explaining to people, like for these webinars, I'll take a screenshot of the, because for me, the drawing tools are a little too cumbersome on Bookmap.
Yeah.
So I can't do it quite as quick or precise. So I'd rather just do it on a 1 minute chart, make it simple. And then when I debrief, like what I'm doing now, I'll take a screenshot of the Bookmap page and I'll draw like what you see here on it for explanation, debriefing purposes.
All right, makes sense. All right, appreciate it. Thanks a lot, man. Appreciate it.
All right. Well, yeah, Crass would love to get you trading on Bookmap. Anyway, I'm working on you on that. I just think you're going to find it easier. But when you have the that all of the kind of composite view there in front of you, I find it easier. Put it that way. But anyway, thanks, Crash. That was great stuff. So I think, guys. Yeah, we gotta wrap it up here. Thanks everybody for all your patience, sticking with it here. I want to keep this at an hour, but we'll just have to be quicker in some of these things and go over less images, I think. But we'll do that if we go over it weekly. Maybe starting in the new year. Yeah, thanks everybody for coming, and we will catch up with you next time. All right, have a good evening.
Bye.
Bye-bye.
Thank you.